17th. Any public comment?
No, sir, there's none.
All right. Remember to ask that question. I'm proud of myself there. Okay, minutes are attached. Can I get a motion to approve the minutes?
So moved.
Motion, second.
I'll second the motion.
All in favor? Motion carries 3-0. Item 2, fiscal year 2025 property and terrorism insurance plan renewal. Mr. Burrows and Mr. McGinty.
Yes, sir. I'm going to hit the high points, and Mr. McGinty is here to explain any details about this. As you recall, our last meeting, we considered the remaining liability coverages excluding property insurance. Traditionally, they've all been done in the March meetings. Last year, we pushed this one back 30 days, and so our renewal date was April 15th. So our insurance has been increasing over the years due to increased losses for property insurers and increasing claim cost for those liability insurers. We did update our property appraisal to include and make sure we have proper coverage amounts for today's construction environment. That increased property values by 33%. So we anticipated a large increase in property insurance premiums. Mr. McGinty went and got multiple options for us. We were able to get 2 options, which we were thankful we had 2. Our current provider, StarTech, quoted the option, and as did Lloyd's of London. The lowest cost option is actually a slightly, my understanding from reviewing the policies, a slightly higher level of insurance from Lloyd's of London, actually come in a little bit lower at a premium of $546,000. Now, the previous policy with StarTech included terrorism coverage. The Lloyd's of London policy does not, so we also got a quote from Convex for terrorism coverage at $5,460. This is a 20% increase over last year's premium. We did, when we presented the draft budget last month, include fund an increase that was actually exceeded this 20%. So in the budget that will be presented here shortly, actually reduced those figures a little bit. But the recommendation is to move forward with this coverage in a combined amount of $551,460. And these will be policies through next March, so that next year we will have all of them at one time back on the same schedule again. But if there's any specific questions, I will refer you to Mr. McGinty and his expertise on insurance.
Questions? Motion?
Mr. Chairman, I move that the Finance Committee recommend to the full Commission approve insurance renewal rates for each coverage category and insurer as listed above.
I'll second the motion.
Okay. No discussion? All in favor? Motion carries 3-0.
Would you like Mr. McGinty for tomorrow's presentation, or would you allow him not to have his time to be here?
I'll leave that up to Chair and Vice Chair's decision.
Mr. McGinty, we thank you for your service, sir.
I just like maybe to ask him next time I go to buy a car if he'll come and negotiate for me.
Yeah. He has provided quite a lot of value for us.
I
We
was
appreciate
gonna
his
say.
efforts.
Thank you.
Thank you. The next item is the fiscal year 2025 organizational budget. Mr. Burrows.
Wow, this is a lot of stuff.
Despite the fact that 2025 does not sound like a real year, we are here to consider our fiscal year budget for next year. This was presented at the March Facilities Committee meeting. There have been some slight changes in individual line items. As I mentioned, we had included an increase in the property insurance line items, which has changed based off the amounts we have presented to you previously, and also some positions that have been filled since the last meeting or have become vacant since the last meeting. So you'll see some adjustments in the personnel cost line items. Net total is about a $70,000 change one way or another, and that was an increase to the R&R transfer. So, going through this, it's going to come up. There we go. All right, so our goals going into this budget year are 3 goals that we typically have. These change slightly year to year, but we always want to focus on maintaining affordability despite our rising costs. We know in these meetings, when we talk about project costs or just annual contracts, we're seeing rapid increases over the past few years. Hopefully that is stabilizing, but they're not going back down. Because of those costs, we're looking to increase our project funding so that we can maintain our master plan and continue to invest in our system. And then obviously we want to look at ways to improve our operational efficiency so that we can reduce our unit cost on water and sewer production. So some highlights in this year's budget: we are requesting a rate adjustment We will be having, if this is approved, a repair and replacement reserve funding increase, and we did significantly scale back our capital equipment replacement in this year's budget due to a lack of available funds. So top line, our current year budget is $35.97 million. The requested budget for next year is $38.93 million. That is an 8.2% increase. We are not requesting an 8.2% rate adjustment. So that is just a top line dollar value. And where do those revenues come from? Approximately 40% come from sewer revenues. Sorry, I got a box here that I can't figure out how to get rid of. Stop that. I don't want subtitles. Anyway. 21% comes from water revenues, 12% from REU fees. REU fees are what your potential water usage is, and that is charged out per account. So a regular residential customer pays 1 REU versus a McDonald's, for example, would have 15 times the potential water usage as a homeowner, so therefore they would get charged for 15 REUs. Administrative fees are a per bill account. That's 18% usage. And then minor amounts included from what's known as other income, interest income, and planning and construction fees. So our highlights, if this is approved, our average residential customer would see an increase of $2.48 per month. We have seen consistent account growth, which we'll go over shortly. That is allowing us to increase this budget by 8.2% without having to increase our average bill by 8% due to growth in the community. And then we also have seen through the good efforts of Mr. Owens and his team, higher investment returns with our Synovus partners. All right, so our water and sewer customer growth, this is a 5-year snapshot. There we go. 5-year snapshot of what we have here. Back in 2020, we had, on average month, we sent out 23,700 sewer bills. Year to date, we've sent out 25,300 sewer bills per month. Water has went from 27.9 to over 30,000 water bills a month. That kind of account growth has enabled us to increase budgets without having to pass on as much of that cost to our customer base as you may have otherwise expected. So the proposed rate adjustment is a 3% increase in both water and sewer usage rates, and a 25-cent per REU increase in the REU fee, and a 50-cent per bill increase on the water, and a 50-cent per bill increase on the sewer admin fee. And if you do the math on that, our average residential customer uses 4,200 gallons of water. That would be $2.48 worth of usage. The first 1,000 gallons of water and sewer usage is included in the base fee of the bill. All right, so some example bill impacts. I know this is one that we need to discuss. Like I said, the first 1,000 gallons are included in the bill, so if you use up to 1,000 gallons, you pay the same amount as if you use 0 gallons. The minimum bill currently for a combined water and sewer customer is $28.50 per month. If this is approved, this will go to $30 a month for a combined water and sewer customer. On the residential, as you go up through there, you can see 4,000 gallons a month, roughly an average bill, goes up $2.42. 7,000 gallons goes up $3.44. An apartment complex down there at the bottom goes up $190 a month. So it is scaling based off your water usage because the sewer rate and the water rates are increasing, and the water rates does go on an increasing block schedule.
Are your slides lined up with this?
No.
Yes, sir. The bill impacts are not in there. All the other graphs are in there, but they're not lined up with that package. No, sir.
Hard to find.
I didn't want you reading ahead. All right, so our bill history. We went to this new rate structure in July 1st of 2018, which was the FY19 starting. So from FY19 to FY23, we made no adjustments in our rates. And last year, we saw an adjustment in our rates, and then with the proposed increase this year. So over a 7-year period, if this budget is approved and these rates are approved, we would have went up on our average customers $3.28 per month over a 7-year period. Which, where does that make us fall? I don't love this chart because every water and sewer system is different based off their reinvestment needs. However, these are regional utilities and coastal utilities near us. If this is based off of my calculations of their water and sewer bills at 4,200 gallons a month, so these may be slightly off if I misread their rate resolutions. However, you can see the average amongst these utilities is $64.62. With these proposed budget, that would be $64.31 here. So I'm not in any way suggesting we have cheap water and sewer rates, but we are in line with our other regional utilities for what water and sewer service costs for the volumes that we have. And this is our revenues per year from the 4 major line items. We do have other line items, obviously, but from the 4 major line items, you can see a consistent growth in sewer, water, REU, and admin fees, but mostly due to account growth. There were increases this year due to the replacement of meters. We had some meters that were registering 0 read, so they were getting a minimum bill, and then once we replaced that meter, now they're using the 4,000 or 5,000 gallons a month, and so there was some increase there. The sewer usage did decrease a little bit compared to projections this year due to the loss of sewer usage fees from our largest customer. On the expense side for next year, of course, the way we budget, revenues and expenses balance out, so the expense budget is $38.93 million as well. Approximately a third of that goes to personnel, approximately a third of that goes to operating expenses, and approximately a third of that goes to our projects and debt service combination. All of that debt service goes is for past projects or current projects. So essentially a third for personnel, a third for operations, and a third for projects. 23.87% for new projects moving forward. That's a very healthy number for continuing to do projects and invest in our system. We currently have 154 budgeted positions, and that is the request for next year. There will be no increase in budgeted positions. We did see an increase in personnel costs because we have done a better job of filling our vacancies in a tight labor market. And why does that matter? Well, it's because when we budget vacancies, we do not budget vacancies at 100% FTE. It's about 50% depending on the position. Some of them are budgeted at 3/4 depending on the likelihood of getting that filled in a rapid thing. So if they're filled, then they're budgeted, of course, at 100%. This budget does include a 3.2% cost of living adjustment and a potential merit increase of up to a combined amount of 5%, although it is very rare that somebody would get a complete 5% on their thing, but that is based off of the CPI for the past 12 months change, and the CPI is the 3.2%.
Andrew, as far as the total staff count, what about some of the discussions we've had about you incorporating some of the inspection services versus
Right,
that
that is not included here. However, if we did that, what we would do would be take funds from the R&R transfer, because it's currently going for projects, and that could be reallocated to those positions.
Okay, so that's not a locked-in number.
That's the budgeted number. We'd have to bring that back to you. I can't just add positions willy-nilly without asking you
Right.
guys about it, but we could do that with funds allocated in the budget for R&R if that is chosen at a later date. So by division, these are operating expenses by division, so this does not include debt service or R&R transfers or bad debt expense. So we spend approximately half of our operating expenses between the wastewater treatment and systems pumping and maintenance. That's the sewer operations. Between water production and water distribution, we're spending approximately 15% of the budget, and the rest of it are the other ancillary groups. The governing bodies costing us 0.59% of our budget. So you got an issue there, but no. The general water and sewer expenses, that 2.5% is where Mr. McGinty has just notified us of the increase in that budget. So finance is registering at 12%. However, that is a little bit of a misnomer because all of our group health insurance costs are billed out of finance. We don't split that out amongst the operating groups because we don't get information on which employee has a claim. So rather than having to split that out, that's all going to finance. And so over half of the finance budget is the health insurance. So what is increasing in this year's budget? The R&R transfer, if approved, is $877,117 higher than last year. That will help offset our rising rehab and replacement costs. Chemicals have gone up significantly. Oxygen and chlorine and sulfur dioxide all saw increases in the per pound cost going forward, so that's a $676,000 increase. And then property insurance, between commercial property insurance, liability insurance, that line item increased to $139,118. Major decreases in the budget. That first one kind of looks weird. We're decreasing our hurricane preparedness by $125,000. No, that's not. We're not being less prepared for hurricanes. We purchased 5 portable generators rather than renting 5 portable generators. So those have all been delivered, they have all been started up, so we have no reason to rent that contract next year. And so whenever we are reimbursed by FEMA for that contract, the cost of 1 year's of rental will have paid for 5 generators. So that'll be a tremendous win moving forward. Capital leases, we did a lease to own program for our 10 permanent bypass pumps, that the last payment has been made on that, so that dropped off. And then our health insurance, we do have a calculation of a projected health insurance cost based off of what coverage people select. That is reduced by $65,800 from this year's budget. And so far, we're tracking pretty well with the projections on this year's budget. So feel pretty confident about that. And I will say, if you're unfamiliar, we do have a group insurance reserve that if for whatever reason our health insurance costs got way out of whack, we can pull from that reserve if for whatever reason that happened.
How much is it?
The insurance reserves are like $1 million. Mr. Owens can highlight that for you when he gets to the financial reports. And these are the equipment items we're requesting to purchase as part of this budget. Compaction testing equipment that is used when we have a road cut. We do compaction testing to confirm that the backfill has been compacted properly so that it will not collapse later. Our current compaction testing equipment is out for service, which means we currently cannot do compaction testing, which is holding up some paving repairs. So we're hoping to buy another unit of that so that we can always have one in service. On that same point, a plate compactor so that we can get away from having to use the old jumping jack tamps. A little less strenuous on our guys to get that done to compact that soil better. A portable CCTV reel. We have CCTV trucks that go out and inspect all of our lines out in the system. And there are some areas that have sewer lines across back alleyways in people's backyards. This portable reel will allow us to take that CCTV equipment into their backyards without having to get a truck into their backyards and tear up their soil and all associated things trying to get there. We have 2 cranes, smaller cranes that lift pumps out of lift stations that the cranes are in a state of disrepair, and so we would be replacing those cranes. We have ordered 2 influent pumps for Academy Creek. There are 4 pumps there. The 2 that we have ordered are supposed to be delivered the first week of May. The request is to order the other 2 pumps in next year's budget. And then a valve exerciser for our water distribution system. That is a automatic valve exerciser that goes down and does, that way you don't break valves when they're exercising those valves. So that's the extent of the presentation. I'll be happy to go through any part of the packet which you have attached. There's the packet that includes our annual goals, which were discussed at our retreat, and where those might be tied into our budget. And then, of course, on the back is the spreadsheet that has the individual line item budget for every line item that you have there. I cannot say that I can speak to every single line item, but I can get pretty close unless there's a real particular question.
I have a question on, this year, I think we've collected about $1.5 million in interest from our
That's correct.
investments. And next year, we're projecting that's gonna be a lower amount.
We're doing $1 million next year, and the reason for that is because our projects that are out for construction right now, we will reduce our actual cash balance that's incurring that interest right now.
Okay.
Am I allowed to ask?
Yes.
Of course.
On the estimated year-end revenue, Andrew, we're gonna be more than 10% higher than what the budget indicated on page 3. With that exceeds what we projected 25 budget to be. And I know we have to have cushions and all that kind of stuff, but can you address
Yes, sir.
the expected overage in revenue on the 25 budget, and are we continuing to build cushions, or are we at some point going to utilize the cushion to save the rate increase?
Okay, so, yes, as Commissioner Cook just asked, you can see if I zoom in here on this budget here, this interest line item here, for operating and reserve interest, projected year end is almost $3 million. We're projecting $1 million in next year's budget. We have a lot of capital projects currently under construction that will reduce our cash on hand and therefore reduce our investment income. The other items that drastically impact that are operational tap fees and service fees that are inflating this year's revenues. They're not inflated, they're actual revenues. But operational tap fees, that is a challenging one to budget. We don't know how many people are going to come in and buy new connection fees going into next year. We have been very blessed the last few years and seen consistent growth. I did increase the operational tap fee line item going into this year's budget, but I don't know that we can expect the same amount of construction next year as what we've seen this year. There's been a lot of large development that has come in. And then the other one is service fees. We have been billing for damages to our lines due to fiber optic installation, and that is inflating our service fees revenue. That is not budgeted revenue. We hope to never have to bill that revenue, but that is impacting those line items in this year's budget.
Do we know how much more they have left?
They're about 40% from completion is my understanding.
Does that answer your question?
Well, not exactly,
Yeah.
because I still don't think that we're, you know, I understand that in your 25 projections, you don't expect to be more than 10% over in revenues
Right.
than the budget, but it did explain somewhat what the additional revenues where they came
Right.
from, but the interest expense was one of the large
Yes.
portions of that, and that's gonna go down next year, so it's getting there. It's a win-lose kind of situation. We held our rates for, you know, 4 straight years. When you make a correction, people don't think, you're supposed to make a correction.
Right.
One of our illustrious paper writers, that adds comments on the back of the paper, said that the county commission should have allocated its $1 million per district allocation to the joint water and sewer to prevent rate increase over here. So it just shows that people don't really know what sometimes they think they know. So I don't know how our budgets cross, but that was the implication. So
Now, if the county would like to allocate $1 million per
Saw
district,
that coming
I
in.
think the
I
county
will be in no way against that.
I think the county is contributing.
Yeah,
So-
they have contributed, yes, sir.
Also, the other thing with a budget like this, there's a carryover at the end of the year.
Right.
But that money just doesn't just go to something, it goes
Goes
specifically.
to projects.
Right, to
Yeah.
projects, and so, I mean, that is gonna help us with all the increases in projects that are
Well,
coming up.
Right, and
that's gonna
I'm
be
glad you
very
mentioned
useful.
that, because that's what I was gonna ask, if any of the overages goes over to the capital improvement
It
funds,
does.
and where are we on that, and should have been here for the facilities, portion, but it, you know, where are we going in expanding our water and sewer, and, to bring more customers?
Well,
And I
here-
don't mean to digress.
No,
We
100%.
We can answer
Here
after the.
shortly, we'll consider an item in the Finance Committee to run new sewer lines to the Brunswick Villa area. We're currently installing sewer lines in the Arco area, and then we have SPOS funds to run more water and sewer lines as well. And the first area will be that Gordon Heights area in between the 3 railroad tracks as discussed last meeting. And so that is an avenue for us to see more customer growth. Like I said, part of the reason that we have not done much in the way of rate adjustments the last 5 years is because we have seen so much growth in our community. And so,
One of the things that we talked about at the retreat is developing a program for alternative sewer connections, and you know, I really would like to see that develop into an actionable
yes, sir.
item.
Right.
Wastewater treatment. That's on page 20.
Yes, sir.
And then at 2021, we had a slight increase each year, and then we had a big increase for 2023.
Mm-hmm.
Budget did go up, over $1 million, almost $1 million over budget.
Mm-hmm.
And then we go back down again to 6.7.
Mm-hmm.
Hey, what's going on there?
Yes, sir. So in this year's budget, you'll see a few line items that are drastically out of whack, and that is purchased equipment repairs, because of, you remember the large $400,000 insurance claim that we had to file due to electrical equipment failure when the roof blew off. We had to replace electrical panels. That was replaced. We have received the funds, which are included in a different line item, so it doesn't offset directly in that budget. So that is not an expected expense for next year. The other thing we also did this year was purchase some new pumps that were unexpected to be purchased and things like that. So we've also, because of, we have the new pumps and the other two pumps failed, we've had bypass pumps that have been there for 6 months, and that's costing us $30,000 a month to rent those bypass pumps. So that is why those costs continue to get higher there. This is, the way this is projected is on a linear approach, you know, expenses to date through 9 months, and so we're assuming, so, now typically that does get us within 5% at the end of the year when we present the budget, so it's not a wild variance or anything, but that is, those are significant line items. The other one is the oxygen at Academy Creek. You can see, we talked about the cost of chemicals going up. We went from $900,000 2 years ago to we're spending almost $1.9 million this year in oxygen. So we're working to implement automatic oxygen control there to reduce some overuse of oxygen to try to get that number down. But that number has, the unit cost of oxygen has went up at least 3 times. I think we're at 150% of where it was 2 years ago. And so it is a huge line item expense, and to the point that I'm actually looking into on-site oxygen generation instead of having to purchase oxygen moving forward. Because when you're spending $600,000 or $800,000 a year, spending $5 million may not be the best approach. You're spending $2 million a year, spending $5 or $7 million is a much more attractive option.
Yeah. Yeah. Maybe I just skimmed through it too fast and missed this page, Andrew, or not, but I would love to see a chart showing the account number increase, what our trend has been, let's say, over the last 5 years. Is there a slide that shows like the number of accounts and how many were?
This is it.
Gotcha.
All right, so it's a little small on this page here on the screen, but you should have this chart in your packet. You see in 2020, 23,729 sewer
Gotcha.
accounts. And that goes to 25,339, so that's 1,600 sewer accounts in a 5-year period, 300 a year, a little better. And then water accounts, 27,942 to 30,000, so that's 2,000 water accounts in a 5-year period. So we're adding, but that makes sense, because you got some irrigation accounts that are water only, you got some water only customers. 300 to 400 accounts a year has made a tremendous increase.
Would it be possible to add on that chart just a percentage increase for
Yes,
each one of
I
those
can happy to-
categories? That would help. Thank you.
Happy to do that,
Yep.
absolutely.
Just so I can compare, okay,
100%, yeah.
this one up this percentage versus what we're,
100%. So that has definitely helped, and then of course, you know, those continue to increase. We have had new development go in that they now pay capital fees and connection fees at time of Arbery, so there's a lot of lots that are platted that haven't been brought online yet. So that we expect there'll be some more growth next year, and that is built into the rate structure as well.
Like all our new growth is water and sewer.
The vast majority of it is water and sewer. We do have irrigation accounts that are coming online as well. We have a lot of people that are getting irrigation meters now.
can we add that as a line item in that chart too?
The irrigation? Well, they're included in the water.
The
but
water,
I can,
but maybe if we
I'll
break
try
them
to
out, it would
split
be
it out,
kind of
yes,
nice
sir.
to see.
I can try to split that out, yes, sir. Water only versus water and sewer, yes, sir.
No, water,
Irrigation.
yeah.
Okay.
Yeah.
I'll try to get those for you, yes, sir.
These have the same water rate as
Irrigation and water have the same rates, yes, sir. There's no different rates for that.
I don't have any further questions, Mr. Chairman.
Where is it? Let me see. Let me get to the page. There, I got it. All right, I'll move the Finance Committee recommend the full commission take the following actions. Approve submission of the proposed fiscal year budget 2025 JWSC budget to the City of Brunswick and Glynn County for the review and comment, and approve the fiscal year 2025 JWSC budget in the amount of $38,930,000.00, subject to revisions resulting from comments received from the City of Brunswick and/or Glynn County.
Second?
I'll make a second.
Second. Sorry, I didn't hear you.
No, you're good, sorry.
I do want to thank you again, Andrew and the team, for all your work in preparing for this budget process. I know it's lengthy, and I know it started a long time ago, but the way you present it, it's easy to digest and easy to understand, and we appreciate it.
Yes.
I would like to point out, Dave Owens, Ms. LaDonna Roberts, and Ms. Frances Wilson's not here today. They do a lot of heavy lifting on this, and I just get to stand up here and talk about it. So.
You did a good job, and we appreciate it. Okay, all in may I have a motion in a second? All in favor? Motion carries 3-0.
Mr. Rosen, I'll bring up the same thing I brought up in the finance committee. It would be great to present this or talk a little bit about all the projects that we're doing in the city
Sure.
before the rate increase comes in front of
Yeah,
the
we'll do
city,
that.
if that makes sense.
We'll do that.
Or even it could be on the same agenda. Yeah.
Probably be good to do that for the county as well.
Okay. Be happy to provide an update.
Be in my meeting on
All right, we want to go to the, Mr. Owens and the approval of the virtual card program and the limit.
Yeah. Yeah. I don't know.
Good afternoon, everyone.
Good afternoon.
See, this item that is before you now was born out of our investigation of P-card programs. And what we have settled on is the virtual card program offered by Synovus. Basically, a virtual card is really just another form of payment. It's affiliated with our existing credit card that we have with Synovus at the moment. Currently, the Commission uses 4 primary methods of payment, being check, credit card, ACH, and wire transfer. Overwhelmingly, most of our payments are made by check. And obviously, from looking at the budget, we spend a lot of money. It would be nice to get a teeny portion of that back, which is what this virtual card program offers us at no additional cost to the BGJWSC. Essentially, the program at an annual spend of $1 million, it offers essentially a rebate of 1%. So basically $10,000 for every million that we spend via the virtual card and our existing credit cards. Our existing credit cards, I think, are spending in the high 20s to low 30,000 a month, which roughly equates to about 360,000 a year, obviously short of the threshold. But if we could get various vendors, the engineering firms, the construction firms that work on our projects, one project could get us over the $1 million threshold possibly in a month. And so we're kind of estimating, well, we did a vendor analysis with Synovus, providing them spend data for a 12-month period and vendor data. That vendor analysis showed that we have approximately 279 vendors who could be invited to participate in the virtual card program. That's something that distinguishes a virtual card from a credit card. We can't just set up a virtual card to go spend anywhere. We have to have a partnership with the vendor that we're purchasing from. The benefit being to the vendor that they can get almost instantaneous payment of an invoice from us via the virtual card. Benefit to Synovus is they would collect a small fee, much like any vendor who accepts any credit card pays a fee on transactions. Now, the benefit to us, of course, is the rebate and not having to pay anything additional to do the program. But we're estimating, hopefully worst case scenario, that we would be able to generate an annual rebate of at least around $20,000. Ideally, if we get enough vendors participating in the program, we can get an annual rebate somewhere over $50,000, possibly $70,000 to $80,000 a year. It'll of course depend completely on what vendors we can convince to participate with us and how we manage that spending. If you're curious about a virtual card, there, as it sounds virtual, there's nothing physical about it. It's essentially a system online with the bank where we've already have a situation where a vendor has agreed to participate with us. They've sent us an invoice. We'll generate a virtual card number for that one transaction to pay that one invoice. So it's all managed in-house through our own purchasing procedure and payment procedures. Doesn't require any really change to anything because it's just another method of payment really. So we don't expect much of a disruption to any of our current processes. So at this time, the staff recommends that the Brunswick-Glynn Joint Water and Sewer Finance Committee recommend to the full commission to approve the application to request Synovus begin the virtual card program with us, and that card program have a limit of $1 million.
And that's the limit before we have to pay it off.
Correct. Yes.
And I'm assuming that it's a $1 million, I mean, is there a transaction limit as well?
Theoretically, that one transaction could be the $1 million limit, or a series of transactions reaching that limit, if that answers the
Yeah.
question.
So this is just an electronic fund transfer, essentially.
Essentially, yes.
Right.
It's done over existing credit card network systems.
Right.
Which was part of the vendor analysis that Synovus did, seeing who on the vendor list were already members of that network, and thus who would be the easiest to approach and hopefully most receptive to accepting the program.
And the benefit to our vendors is that they literally get the money right away.
Right. As I said, most of our payments overwhelmingly are made by check. So
Right.
you know, get the invoice, we could probably wait until getting close to the invoice due date, issue the check, mail the check, they receive the check,
Right.
deposit
Yeah.
the check. All of the check item processing that goes on between banks of, holding funds for whatever period of time. This happens electronically and instantaneously, really.
Have you had a chance to speak to any of our vendors about the possibility of using this?
Not yet. We submit the application at the same time we modify a form letter that Synovus provided to us. We customize it to fit our situation a little bit, and that letter gets sent by Synovus to all of our vendors to invite them into the program.
And you're able to make the modification in the finance system, the software system to do this?
Right.
I mean, I'm sure it's just a minor, just identifying what kind of transaction it is.
Exactly.
Okay, right.
What kind of check and balance?
That's where I come
I'm
from.
kinda outdated, but, we have to have two people sign some checks.
Right.
And all this other kind of stuff. And historically, the Joint Water and Sewer Commission is probably the best utilities as far as paying our vendors right now, that I know of in the state of Georgia. So why do we need to be concerned about paying them tomorrow when they send an invoice? We pay them for the week, that's a lot better than most of them.
Oh, right. And that's
Then we got
part of the
checks and
challenge.
balances that we need to have. I'm
That's,
concerned this is just could lead to fraud, it could lead to mistakes and everything else.
I don't see that as a possibility.
Why we're doing this to help the bank and the vendors, when we're already treating the vendors very good.
So can you explain the different approvals that will be required before this goes out to ensure that we have appropriate approval limits and everything, that certain things have to be approved by either myself or Ms. Roberts or things like that?
Yeah, essentially, I would be the program administrator who can go in to actually create a virtual card, but the system goes through all the normal checks and balances of receiving an invoice, those invoices being approved by the necessary personnel depending on the spend level, and when payment is issued, similarly, we've had, for like large wires, more than one person is required to approve that wire transaction. This would be very much the same thing.
So in other words, it would still require virtual signatures in this case. But the system can't be changed like that. So it would have to be two people saying yes to create the virtual card.
Yes.
There would be checks and balances there.
There would be a creation and an approval.
Plus, the other thing is that, we had the incident where someone intercepted one of our checks and cashed them. And of course, because you're going only to approved vendors, this would eliminate that possibility of checks getting in the mail and things like, or getting lost in the mail, because then you have a virtual card between you and that vendor specifically. And that it can only be created for the two of you because you're both registered that way, so.
Exactly.
So it does, even though it's electronic, it does have a lot of, it seems to me, from my perspective, there's a lot of safeguards built in that are already, you know, we're using kind of an old-fashioned kind of way with checks, with paper checks and mail and everything, but we're doing is reducing the, you know, all that extra postage we pay and the lag time for the mail. So I think there's a positive part of this.
Well, and I think adding a little $20,000 to $50,000 in cash flows, a little bit, you know, moves the needle a little bit, not crazy.
Money's good.
Who pays the cash back?
Synovus.
Synovus, as an annual rebate check, so it would be once a year, look at our spending for the previous 12 months. If we've met or exceeded that threshold, it's 1% of the total spend that they would cut us a check or possibly even just credit our account.
Yeah, the vendor is agreeing to probably a 2.5% charge to get their money today, and then we're gonna get 1% of that next year. Only 1% of that. You know, just on a personal note, you have to be careful though, because if I spend $10 across the street with the hot dog guy, a $10 bill, and he goes down the street and he spends $10 on buns, and that guy goes down the street and spends $10 on gas, 15 transactions later, we still got a $10 bill out there. In this model, that $10 becomes $9.98. That becomes $9.95. It becomes, you know, eventually cash goes away and everything we do has a transaction fee associated with it. Just my personal.
To that point, I would say invest in bank stocks.
There's a couple that didn't go so well.
Exactly.
But, but from our standpoint, you know, and to your point as well, yeah, the percentage payment that would be kicked in by the vendor on the transaction itself. And that, of course, is also one of the reasons why we're estimating such a low amount of return on this. We've spent, you know, obviously we spend 30-some odd million a year. The vendor analysis and those 279 vendors, we were, I think the top 20 was, top 20 vendors we spent $25 million with them. One of those vendors, we spent $10 million with Delta, which was, of course, the meters for the meter replacement project. Obviously, we won't spend that much with Delta again next year or the year after, but we will spend some amount, you know, as meters fail and we need new meters for new locations, new customers, etc.
So do you have to go back and take the vendors back to Synovus to get them on the approved list? Who does the agreement between the vendors and Synovus?
There is, with the letter that Synovus will send out that we have customized for ourselves, Synovus will invite those vendors to participate, and there's a one-page application form that they would fill out and return to Synovus to be part of the program.
Now, why would they want to be part of the
So they
program?
get their money now, so they can get their money the
But they're
next
gonna
day.
get their money now pretty much anyway.
That was where I was going, following up on what Ben said. If they already get their money within a few days, if they get it in a week, are they willing to pay 2.5% of the transaction to get it a few days earlier?
Which is why I'm estimating at the best case scenario, $7 to $8 million spent to various vendors instead of 20-some odd million spent to various vendors and us
And
getting 200,000.
one thing I will say, this doesn't, setting this program up, there's no fees to set this program up,
Not for us.
not for us whatsoever. So offering this program does not increase our cost at all. If no one uses it, if none of our vendors take advantage of it, then we haven't lost anything.
Do we make any money at all on our average daily balance?
Yes.
So how much is, you know, if $7 or $8 million goes out almost instantly, then it's those few days of carry versus the average daily balance interest that would go against the $20,000 to $50,000 worth of earnings.
Which in our operating accounts, currently, that's 4.5%.
So, yeah.
Something to think about. That's good.
Would it not offset what we project to earn off of this? What, I guess the bottom line, what's the benefit to JWSC? Are we, yeah, what's the bottom line benefit?
I think we're gonna end up getting money back. We're gonna have a good relationship with our vendors. And I think the other thing is, this isn't a new program. This is already in place, it's just new for us. Just like before, when we used to, employees used to get their paycheck on Friday, and they all went to the bank at lunch to cash their checks. And now everyone gets direct deposit. It's just evolving, and hopefully most people do. But it's
You'd be shocked
evolving.
how many people don't.
And this is just another way to make it so that it's easier. And like I say, it prevents us from having to mail checks, spend the time to put checks in envelopes and do things like that. So it streamlines some of our operations. So I think there's an offset there too.
Yeah, but if I have money in my bank account that's making 4.5%.
A year, and you're gonna, what,
versus
how many days?
1%.
Right. But how many days is it gonna be in there?
And that's numbers that I'm curious enough, I'm gonna run.
Okay,
And,
yeah.
I wanna know,
Yeah.
if my average daily balance is this, and I'm making this percentage interest per day, the money that I have in that account is
Right.
making me this. Now, how many days do I make this?
Yeah.
That would be over and above what it would be if somebody direct withdrew my money,
Right.
5 days earlier or whatever.
Yes.
And
Yeah, that's the other thing is the virtual credit. So would we pay the balance on the card every 30 days? Is that
Yes.
kind of,
It's just like our current credit card. It's a
That's
monthly
a good point. It's not like
so
the
it's
cash
not,
is going out
it's not like an
immediately.
EFT,
Yeah.
we're again kind of floating it. Any effect to our credit rating or anything, with this?
No,
Not really, nothing?
Shouldn't have any effect on our credit rating. And
Well, I mean, I think what may make sense, y'all got some very good questions here. We could run that analysis and bring this item back to you at the May meeting to confirm that we have got these questions answered.
just give y'all a little something to do.
Well, if I can offer, we had this discussion, I think when we was our previous business partner, probably before the pandemic. And it's sort of, they did that initial match with the vendor. And we had a few people that said, yeah, maybe, and we had a few people that said, no, I still wanna get my check and want my EFT or whatever.
Mhm.
So, like you said, to that point, to do that, there's really no risk to that. But it would be nice to see, like you said, let's just say $1 million, $5 million, then what does that mean?
And,
You
and,
understand more about that.
and just business minded, if they know that we're gonna charge them 2.5% to
Everything
process
jacked
does their price go up, a percentage to offset what they're having to pay?
They want to do that to
No, I wouldn't either.
Most contractors are gonna be paid for 30 days.
Yes.
Most vendors, I think they used to, they have net 20 or something like
Yeah.
that.
Most of them are net 30. There are a few that are net
So
20.
you can pay for 30 days and you're paying additional fees.
No.
And they used to, that's built in, so it's not gonna change. We're not gonna get a better deal by letting them pay them instantaneously.
There would probably be some that maybe cash flow is tight enough that they would like to see that money, get back in their circulation, and it's worth 2.5% to do it. But as much as they're charging, I can't imagine any of them are in a cash flow struggle anymore. Seems like we're getting hosed here, so.
I understand. That's one of the things we do to try to entice people to work for us.
Mr. Chairman, I'm ready to make a motion if you are. First of all, I want to commend staff again. I love ideas, being creative, outside of the box, thinking about ways to make money or save money. I think it's super smart. But I'd like to make a motion that we table this, an action on this agenda item until our next regular scheduled. Deferred, excuse me. Thank you.
I'll second the motion.
Motion and a second, all in favor? Motion carries.
What are we up to now? Oh, good.
It is, it's gone. Deferred is, we're kicking it down the road.
Okay, item number 4, Mr. Burrows, is a contract award of the 4002 Basin CIPP Rehabilitation Project.
Yes, sir. Basin 4002 serves the south end of the city of Brunswick, essentially from I and J Streets down towards King and Prince. It's the largest sewer basin we have. There's approximately 150,000 linear feet of pipe in that sewer basin. We ran CCTV cameras through them, scored every segment on a 1 to 5, and then looked at the ones that were 4s and 5s as in needing the most immediate attention. You're on Brunswick Villa. Most immediate attention, and which ones were candidates for this trenchless rehab method. And what we've determined is there's 26,883 linear feet of pipe in diameters ranging from 6 inch to 24 inch that qualify for this rehab. We took bids on March 26th, got 5 bids back at $1,748,173 as the low bid. That is significantly below the engineer's opinion of probable cost, but we'll get to that in a minute. Bid items 16 through 25, 28, and 29 on the attached bid forms are invoiced as requested. They are per segment charges that have to be approved by the project manager upon inspection by the contractor when they come in. So our total cost for this project will exceed $1,748,000. They will be higher than that, and we will be bringing back a final balancing change order once all of those line items are taken into account. However, there is $4,529,977 left on the GFA loan that is funding this, and we will get nowhere near that $4 million number as part of this project. So this will be a lot of night work and weekend work, and there will be some traffic disruptions as a result of this. These are all water-cured lines, so we will be putting out detours and things like that. There'll be a lot of public notice about when these lines are happening. This is in downtown Brunswick, as we know, a commercial district. The lines in between the Pate Building and the courthouse are included, and those will, of course, be done to limit disruption to the community. But the low bidder is Bionomic Services, who we have done extensive work with. This design, review, bidding, everything was done in-house, so we haven't paid anybody else to do any work on this thus far.
You ready for the motion? Yep. Okay, I'll move the Finance Committee recommend awarding a contract for the 4002 Basin Cured in Place Piping Rehabilitation Project to Bionomic Services, Inc., the amount of $1,748,173.00.
Second.
Motion and a second. More discussion?
Just as a note, the cured in place process here is so much cheaper than replacing pipe. It's just dramatic, as well as the disruption to the community. I mean, I won't quote you any numbers like percentages, I'll let that do. But I know it's a very favorable thing, and it creates virtually a new pipe, doesn't it?
Yeah, create a brand new pipe inside. It's fully structural. It only uses the hose pipe for shape. The hose pipe is not required for any of the structural integrity of the new pipe. They estimate 50 to 75-year lifespans on the repairs. And so you do have a seamless repair at that point as well. You don't have joints and everything like that, so there's less potential I&I situations, less sinkhole possibilities, things like that. We did, this is 2 years ago pricing, so who knows what it would be today. But 2 years ago, we installed 5 miles of pipe down Harriage Riggers and Canal Road for $5 million, and we're rehabbing 5 miles of pipe for $1.8 million.
So this is a really significant
And
project.
I will say that 5 miles of pipe was in the shoulder, not in the middle of the road.
Yes, did include that.
Once you pay for paving, it's going to get much higher than that.
So the price is reasonable, and it's going to reduce our I&I
Absolutely.
and minimize disruption to the community. So, all right, thank you.
Perfect. Any more discussion? Motion and a second. All in favor? Motion carries 3-0.
I've been promoted.
Actually not. So contract award Brunswick Villa area sewer expansion, please, sir.
Yes, sir. As part of our ongoing efforts to do what we call infill expansion, these are areas adjacent to existing JWSC assets. We have identified the ARCO area as a project that would be consistent with that approach. The Brunswick Villa area is bounded by Altama to the east, Brunswick High School to the north, Wiley Avenue to the west, and 6th Street to the south. Is essentially across the railroad tracks from the ARCO area where we are currently working. There's 219 parcels that do not have access to sewer at this point. They all have access to water. So this project will be to provide new access to sewer for lines in the streets where they can tie on from aged septic tanks. And there will also be a replacement of 650 feet of water main as part of this project. Some old galvanized lines that need to be taken care of. We had 3 bids submitted the same day as the CIPP bids. The low bid was Southeast Pipe Survey at $4,658,360.50. there was a bid alternate that instead of just milling the areas necessary to do the water and sewer installations, to just rip all the asphalt out and replace all of it. And that actually created a deduction of $113,300, bringing the total contract value to $4,554,060.50. This is within 1% of the engineer's opinion of probable cost. They're $2.3 million over budget. This will be funded from uncommitted funds in the capital improvement fee reserve. I will also note there is a chance that we can sequence this work with the current Glynn County LMIG list. There are a couple of streets in there that are on the LMIG list. Our goal is to sequence the work so that we can get in there, get the sewer lines installed before Glynn County plans to do the LMIG paving. And that way we are only disrupting that area once, and then we're not doubling the cost of paving to do that. So there may be additional savings to this project, but until we can confirm that we can get out ahead of their contractor, that's not being considered at this time. So the request is to award a contract to Southeast Pipe, who we have done a lot of work with over the years, for this Brunswick Villa project at $4,545,060.50.
Discussion?
Did we do the motion yet?
Not yet.
I'll move that the Finance Committee recommend awarding a contract for the construction of the Brunswick Villa Area Sewer Extension Project to Southeast Pipe Survey, Inc., in the amount of $4,545,060.50.
Second.
Any discussion?
I would say that in our last meeting with facilities, we had a lengthy discussion about this project. And I think some valid points came up in terms of potential partnership with Glynn County or other entities to help offset tap fees to encourage these septic users to tie into this new infrastructure. So I think, I'm totally in favor of this project and want to see it moving forward, but I also don't want to approve this and see that conversation die. So I would encourage us to continue that conversation as we move forward.
Well, yeah, and we can have some more discussions tomorrow, like in the fall, but
Yeah.
right this second, this is an absolute waste of money. We're never gonna recoup this money, ever.
The more people that tie on, the more rapidly. the money
Correct.
is recouped.
Correct.
Okay, motion and a second, all in favor? Motion carries. Okay, Mr. Burrows, pump stations 4105, pumps purchase.
Yes, sir. Pump Station 4105 is off of Kate Road on Winstead Drive back in the neighborhood. It handles sanitary sewer flows from the exit 38 area. That is scheduled for force main replacement and electrical upgrades through a funded capital project. However, the existing pumps have reached the end of their useful life. One of them was sent off, and the cost to repair exceeded the cost to replace. So at that, we requested a quote on replacing both pumps, which we received an in-kind replacement for two 20-horsepower flight submersible pumps at $36,856.40. Upon completion of the force main and station upgrades, we will be, as part of the station upgrades, replacing these pumps with larger pumps. But these pumps can be, at that point, relocated to Pump Station 4109 on Glencoe Parkway out by the Air National Guard building to replace those existing 20-year-old pumps. So they will be relocated, and this asset will not just be taken out of service. So the cost to replace, $36,856.40, will be pulled from the Systems Pumping and Maintenance Operations budget.
I make a motion that the Finance Committee recommend approval of the purchase of two new flight submersible pumps for Pump Station 4105 from Zealand Water Solutions USA, Inc. in the amount of $36,856.40.
40 cents. I'll second the motion.
All right, motion and a second, any conversation? All in favor? Motion carries 3-0. Mr. Burrows, Academy Creek influent pump bases repair.
Yes, sir. The way a submersible sewage pump works is you slide it down on guide rails and it sits down on a base, and that keeps it in place. The pumps at Academy Creek, when we had some issues and ordered two new pumps, we inspected the bases that they sit on, and those bases are not fixed to the wet well floor appropriately, so the bases are sitting there vibrating and they're cocked out a little bit, and this is reducing our pumping efficiency and also significantly increasing the wear and tear on our pumps. So the new pumps that we ordered in September are supposed to be delivered the first week of May finally. So the hope is that we can get this work done in advance of that so we don't set $80,000 pumps on bases that are going to vibrate like crazy. So the request here is to award a contract to BRW Construction Group, who is doing the work at Dunbar, not at Academy, but they do just try to work at Dunbar. They can have crew members come in and have this work completed before the pumps get here in early May so that we can get those bases installed correctly and the new pumps will perform as they should when they arrive. The cost to do this is $49,192. This would be pulled from the Academy Creek operations budget.
So how do they secure that? Are they gonna pour a new floor?
They're gonna, the existing holes where the lag bolts have wallowed it out, that will be fixed, and they're gonna pour a very slight platform at the bottom so that it can be re-anchored in the new platform.
So,
So like rebar up from the existing holes and
Yeah,
rebar into
they're-
a new foundation.
and then epoxied in or something?
They're sealed in, it's not epoxy. The epoxy dissolves in the sewer system, but it is sealed in with a grout, a sewer safe grout and things like that.
I move that the Finance Committee recommend entering into a contract with BRW Construction Group LLC to perform rehab on the influent pump bases at Academy Creek Water Pollution Control Facility in the amount of $49,192.00.
I'll second the motion.
Okay, motion and a second. Sounds like our Chevy needs new motor mounts.
Yes. Pretty much.
Yeah.
If your Chevy was vibrating this much, you'd want to do something to it.
Yeah.
Anything else?
No.
Okay, all in favor? Motion carries 3-0. Mr. Burrows, SPMD 302 engine and AC
Well,
repair.
speaking of Fords, we have a 2015 F750 dump truck used by our Systems Pumping and Maintenance Division that has experienced engine trouble and was sent to Tom Neal. Tom Neal is a person, but this is a company, so we're not just to one individual person here. Tom Neal and Waycross for inspection and repair. They specialize in medium and heavy-duty truck repairs. Upon inspection by the service tech, it was determined and confirmed by Cummings that the complete engine replacement is needed. There is also repair work needed to the air conditioning unit while it is there. Tom Neal provided a quote of a not-to-exceed amount of $31,804.80 to repair and replace the engine and AC on this equipment. Spending $30,000 to repair a vehicle sounds like a lot of money. To replace this would be somewhere between $125,000 and $150,000, and heavy equipment is not exactly readily available right now. So we feel like this is probably our best approach to move forward, and this would be funded out of the Systems Pumping and Maintenance Operations budget. There are attached is the technician's report of exactly what is wrong with it, and a list of parts that may be needed. That is why this is a not-to-exceed budget. If those parts are not needed, they will not be charged out.
All right, I'll move the Finance Committee recommend awarding a contract for the repair of SPMD 302 to Tom Nail Waycross in the not-to-exceed amount of $31,804.80.
Second.
Motion and a second. All in favor? Motion carries 3-0. Mr. Owens, financial statements month end, March 31st.
Good to be back again.
Yes, it is.
Let's see. As for a month end, March 31st, 2024, we can start with our balance sheet, page 1. I've highlighted various items. Overall, just a comment, March was nothing particularly unusual, certainly no surprises, nothing out of the ordinary. Bond sinking fund at $2.38 million. That's an increase of $246,000, which is our standard monthly transfer to the bond sinking fund. Accounts receivable net of the allowance for bad debt, that's coming in at just over $2 million. That's actually a decrease of $413,000 from prior month. Most of that being $300,000 that we received in March as payment on our tower rentals. We get that payment once a year. Also, there was a reduction of about $176,000 in regular customer receivables, the largest portion of that being Clement Bell Farms, who had an outstanding bill for, that's a new apartment complex, I believe. I can't remember exactly how many meters we're setting for them, but it was roughly a $200,000 bill that had reached into like, I think 60-day age timeframe. Let's see. The prepaid expenses, almost 280,000 at the end of March. That was an increase of 118,000, largely due to insurance renewals that were paid in March. Restricted cash accounts, our reserves account or accounts totaled 47 million, 85,000. Most of that was payments from North Main water loops, Dunbar Creek transfer switches. That was a decrease of almost $340,000 for the month. See, capital reserves came in at the end of the month, 13,764,000. That was almost 500,000 higher than last month. That was monthly transfers and the Clement Bell payment. Let's see. The SPLOST account is currently at $3,168,000 for the month. That was a $230,000 increase, which has been kind of standard for our SPLOST receipts on a monthly basis. Basically total assets ended at 274,800 and, sorry, my apologies, I skipped over capital assets. Fixed assets were at 146,471,000 for the month. Most of that is dedications from Autumn Woods, which that was roughly $500,000 increase in the month. The construction in progress was $37,204,000 at the end of the month. That was a $989,000 increase over prior month. Dunbar Creek and generators all contributing to that. Total assets at the end of March, 274,800. My brain is flirty today. 274,878,000. And that was an increase over prior month of about $1.5 million. See, current liabilities, accounts payable sitting at 1.129 million as of March 31st. Those payables, of course, again related to Dunbar Creek, payments for our generators, payments of 118,000 or more for insurance.
Can you remind me of what the unearned revenue at 4 million is?
ARPA funds provided by Glynn
ARPA.
County.
Thank you.
You're welcome.
We just sent some of it back to you.
Which was actually unchanged because that was
So
turned sometime back.
when they graciously offered us $4 million of their ARPA money, part of that money had to be used for the Village Phase 2 project, which they have invoiced the water and sewer amount on that, so we cut them a check back out of that money to cover their cost on the Village Phase 2. 217,000, I believe.
Yep. Our retainage payable as of March 31st was just a little over $1 million at $1,013,084. That was a $32,300 increase from prior month, largely from ARCO Water and Sewer and Dunbar Creek. Interest payable for the month, we've ended at $350,687, and $93,000 of that was bond interest. See, total liabilities as of March 31st, that's on page 2 at the top. Total liabilities, $82,528,808, which is a decrease of $727,700 from prior month. Skipping over to page 4, we see our income statement. Sewer and water revenues, $11,300,000 and $6,022,000 respectively. Sewer, of course, still being a little bit below budget year to date, and of course from the loss of Pinova. The water revenues being $397,566 over budget. Interest income sitting at $2,115,875 year-to-date. And other income, $2,115,238 at the end of the month. Other income, of course, would be where we would see that tower rentals coming into play. The expenses, we'll flip over to page 5 to see the breakout by departments.
Page 4 is a breakup by department.
Oh, I'm sorry.
Page 4, yeah.
Page 4. The largest expenses for the month hitting administration, finance, planning and construction, systems pumping and maintenance, wastewater treatment, water distribution. And then you see the only thing that's looks a little strange for the month, property and casualty insurance. That's because of a fluctuation between our renewals. We had some renewed last month in March. We've just gotten the property insurance quotes the other day and are renewing those. We'll see this account even out for next month. But the administration, finance, planning and construction, most of those expenses, they're coming in under budget. The difference from last month mostly coming from personnel and insurance related costs. Systems pumping and maintenance, noticed some high overtime and equipment rental costs, that being about a $448,000 change from prior month. Wastewater treatment, $634,000 change for the month over month. And of course, that's largely chemicals, equipment rentals, electrical service and maintenance, overtime and equipment rentals, and also biosolid removal and parts and pumps seem to be the major categories of expense contributing to that total within the wastewater treatment division. Water distribution saw expenses year-to-date $1,654,861. $210,000 basically was the March expense for water distribution. Basically showing net operating revenue year-to-date $10,021,759, which is coming in a good bit over budget by a little more than $1.5 million. Bad debt expense, currently, as of the end of March, $365,925. That was coming in over budget, I believe. Yes, $275,000, which we've talked about previously with the loss of the LIWAP, which I believe was somewhere over $300,000 benefit when we had that program last year. Capital fees, which are capital improvement fees and SPLOST revenues, that's showing up year-to-date, $2,471,000 and $1,970,000 respectively. We have page 5, the group insurance costs through March 31st. Total group insurance being $1,197,074. Over under budget coming in. See, I'm believing that's over. Under 5 million or 51,600. Our cash report. Cash revenue deposits, overnight cash, 4.39 million. General checking, payroll, group insurance, these are minimal accounts, 156,590, 16,139, and 50,000, giving us a total of 4.615 million. That's for operating cash. The bond sinking fund, 2.381 million. The operating reserves, we see 156,000 in overnight cash, with 8.75 million in the investment reserve account. capital reserve, just shy of $1 million in overnight, with 3.188 million in investments. Repair and replacement reserve, 3.9 million in overnight cash, 29,146,000 in investments. And group insurance, 121,206 in overnight cash. The reserve investment account at 823,667. So showing 41,910,434 in investments for elective reserves, 5,175,388 in elective cash reserves in overnight cash. Page 7. See the legally restricted reserves, capital improvement fees. We have 5,653,835 in the overnight cash account, 8.1 million in investments, SPLOS 3.16 in overnight cash, 0 in investments. Customer deposit reserve 357,850 in overnight cash, 2.6 million in investments. And below you see the sum total of all of that coming together. Cash, the bond sinking fund, elective, and restricted reserves. 18,970,000 in overnight cash, 52,621 in investments, 10,900,000 held by the trustees, and then $3,932 in on-site cash. Page 8, the list of our current investments. Big notes are, of course, that the cash and cash equivalents are yielding 5.19%. Fixed income investments in total, that yield is up to 3.29%. Total portfolio yielding just over 3.5% at the moment, or at end of the month. And page 9, of course, is the project report, which we basically discussed in facilities meeting, but I can answer any questions you have at this point on anything.
No questions for me.
I'm good.
Who handles that investments?
I manage that with Synovus.
And you pay them fee?
There is an account fee, but it's been outpaced by the interest and interest earned on the account.
All right. Any other items for discussion? Can I get a motion to adjourn?
So moved.
Second?
All in favor? Motion carries 3-0. Thank you.